Shares of Alphabet on track for a record close after hitting a 52-week high. Company introducing its latest model, Gemini 2.0, a day after revealing its new quantum computing chip. And Aaron Kessler, Seaport Research Partners senior analyst, joins us now to discuss all this. Aaron, always great to see you. So let's start with that news we got today, Aaron. Google did unveil a new version of its flagship AI model. I'm just curious as a financial analyst, walk me through what you made of that headline, that news, and what it possibly means for investors.
Yeah, no, I think it shows that Google continues to be the leader in AI services. Obviously, Google's been investing in AI for several years now, and it was one of the early leaders. I think there was concern, obviously, with OpenAI maybe jumping Google in terms of with ChatGPT, but I think Google's had a nice rebound here with tools like Gemini. Obviously, we saw the quantum computing announcement yesterday. So despite maybe not getting off to the best start, Google's really come back pretty strong on some of these new releases. Still early in terms of maybe consumer adoption of some of these services, but clearly they're seeing strong growth in their cloud business, 35% growth last quarter. And we think AI has been a leading driver of that cloud usage as well.
But Aaron, we knew about that stuff, right? So is it the quantum and Gemini stuff that is boosting the stock? I mean, we've seen pretty forceful run over the past couple of days. It's trading at a new record. Is that what's going on here?
We think it's probably a few things. We don't think it's just this, which is probably somewhat immaterial in terms of today's announcements. We think you've seen a nice recovery in the FANG names over the last couple of weeks, maybe that rotation back into some of the FANG stories. Obviously, Google was oversold in our view when it got down to the 170 level. So it kind of got overly punished there, we think, on some of the regulatory concerns. And maybe investors are saying with the new administration coming in, less likely maybe we see some DOJ action in terms of really splitting up Google and Chrome, which we think is pretty unlikely. You saw, I guess, with GM, with Cruise getting out of these autonomous vehicles, it's in our view, it's kind of really Google's with Waymo, as well as, I guess, Tesla market to lose at this point as well. So I think investors are increasingly getting more positive on Waymo, even though it's a relatively small part of Google's valuation at this point.
Aaron, earlier this year, there had been some concern in some quarters about just general rising search competition. There was this idea, well, AI is going to upend and disrupt Google's bread and butter. Has your research, have your checks, survey work, Aaron, has it shown any real meaningful slippage in Google's share there?
Yeah, it really hasn't. We've seen obviously very strong search results from Google, double-digit growth again this year. We're looking for roughly 10% growth again in 2025, but really haven't seen any meaningful degradation in search market share. Something we'll continue to watch with companies like Perplexity or ChatGPT. We think in some users, maybe early adopters, are clearly using these services, but until it really expands beyond kind of early adopters into more mass market, we're not overly concerned at this point. And even if it does, and Google's, obviously Google will have a strong position with AI search as well.
Aaron, it's interesting that you mentioned Waymo, right? And their sort of runway there. It is relatively small, and yet, fewer people are talking about that than they are about this other stuff like quantum that's years into the future here. What do you think is the potential of that Waymo business, even though it is relatively small?
Yeah, no, right now, we think most analysts are looking at maybe a $40–50 billion potential asset. We think it's really years away in terms of revenue scaling into that size to make sense of that valuation. But clearly, it's really Waymo's business to lose right now. And we expect them, as they indicated the other day, they're going to be expanding more aggressively in 2025 into newer cities, getting up to 10 cities or so. I think if you've taken a Waymo before, you kind of realize that it really is going to be most likely the future of taxis or taxi services.
So, Aaron, let me ask you. Listen, you're bullish on the name. You got to buy. That's what you tell your clients. This stock has had a tremendous year. It's up around 40%, Aaron, in 2024. When you talk to your clients and they ask you, okay, it's a buy, Aaron, but what's on your list of worries? What's on your list of concerns? Is it valuation? It doesn't sound like you're too concerned about regulation. What would be on your radar?
Yeah, not valuation. We think valuation's always been fairly attractive on Google. Even with the recent run, you're looking at 20 times core earnings, and these core earnings are growing we think mid-teens right now or so with search and kind of YouTube, et cetera. Obviously, if they actually were forced to split up Chrome from search, that would be a concern. We don't think there's a high likelihood of that. And if we were to see search share losses to some of these new upstarts, that would be a concern, but we don't think we're seeing that yet, as we talked about. So I would say either search share market losses or actual DOJ action on their core business. We think it's a good likelihood you get some of the ad tech assets are split up. We don't think that's a big part of Google's valuation today, though.
Aaron, always good to see you. Thanks for taking the time to join us.
Great, thank you.